What's going on, everybody? So let's try to get a little bit of a game plan going into tomorrow. So today on the triple Qs, we were up 2.5%. We were up $8 on the day. We closed at 389. I love what the bulls did. We did come off that bottom channel yesterday, testing at 377.52 area. Did lose previous all-time lows as of recent lows, going back to the 3rd and the 6th of December here. Kind of lost out a little bit. You can see we bounced off of the 100 and the 150, or actually it's the 100 EMA and the 100 SMA. Kind of came down here, tagged this support. Today we had that little gap up, got back over this channel here, reclaimed the 50-day moving average. I like the price action today. What we're looking at long here is 389.67. We are coming into a little bit more supply, so the triple Qs and tech is still not out of the woods yet. This is still yet to be known. Is this just a dead cat bounce? Are we going to possibly tag the 20 and the 10 SMA around 390, 391, and then start to roll back over again? If we do, we're going to want to really look at this 50 EMA at around 388. Do we lose that 50 SMA and EMA? And if we do lose that level, then we are going to come back down to this 382. That's the range that we're in right now. So the range that we're in is 377 to 390, 391. That's the trading range. So technically we are at the top of the range. So going into tomorrow's session, if we can't confirm today's highs of around 390 and start testing the 20 and 10-day SMA where we can start to reclaim these levels, then this is the top of the range. And then we need to start fading our stocks and fading the indexes back down with initial fade on the triple Qs to 388. And then if we get below 388 and the 5-day moving average here, then we have maximum potential here down at 383. That's the range that we're in, guys. Until we start clearing over 400 and 401 and start retesting these all-time highs of 408, this is the range that we're going to be in. So previously we were in a range of around 389 to 401. We couldn't hold that range. We dropped below it, and now we're in this range of around 377 to 390. That's just a trading range that we're in. So if you're a range trader, you would be looking for shorts tomorrow. So you'd be looking for any sort of rejection into supply. You'd be looking for the rollover. And as soon as you get the rollover, that's when you're going to be looking to start to short stocks. I'll just give you a general example. NVIDIA had a good run up today, up 13 points. What we would be looking at to short NVIDIA, if we get rejected at the 10 and 20-day moving average, we get stuffed, we start to roll over. That's going to be your short position. Something like Microsoft. I love Microsoft long. However, again, we're in that trading range, between 320 and 327. If we do come up here and kind of tag this 20-day moving average at around 329, start to roll over, then we potentially have room to the downside back down to 326. Something like Tesla, been trading down for quite some time now. I do like what Tesla's doing recently. We did come down, we filled that gap, we did get our first close over the 5-day moving average. Tesla does realistically have room back up to 961 and 967. I like that for a little day trade tomorrow, a little scalp long. And then regardless if we get stuffed or not, I think Tesla gives us enough room to make, pretty good little day trade there. But let's take a look at the futures market right now live. So right now, currently it's only 8:13 p.m. Pacific Standard Time, still relatively early. But what we're looking at here is a little bit of rejection at the 10 and the 20-day moving average. We are losing the 50-day moving average again. So initial support we need to watch going into the overnight market is 15,883. And then we also need to look at 15,862. That's going to be the 50 EMA as well as the 5-day moving average. I think if we do gap down or we do lose these levels at around 15,854, something in that range, we do have maximum potential to come back down here to the 15.7s. That's 15,700 if you're looking to play that to the short side. So just keep an eye on that. But overall in the market, this is a good day. Normally this time on a seasonality point of view, typically we are in a run up going into the first of the year, and at least the first 1 to 2 weeks of January. We have not got that run up yet, but today could be very well be the start. We just need more confirmation. Every day we need confirmation. We can't just have any sort of bias. We can't really go into the day, until we break trend, meaning that until we get out of this consolidation, this sideways action that we've been at realistically since the beginning of November, until we start trending long or until we start trending short, we really can't just start putting on swing trades and saying, hey, at the end of the week, yeah, we're going higher. At the end of the week, we're going lower. Realistically, we can come up to this range and tag it, and then the next day we can be all the way back down here again. So that's the only downside about being in a range. But the only good thing about being in a range is we are going to get these massive down red days that are going to provide perfect opportunities to short or hedge your long positions short. And then we're going to get these massive days like we had today, these big run-ups where, you know, we're going to get that initial flush, we're going to find a little base at support, and then we're going to push higher. And with that being said, you know, there's plenty of room for scalpers and day traders to make a good, honest living trading these ranges. You know, it's a little bit more volatile, it's a little bit more sketchy, there's not a lot of follow through, you have to really manage your trades a little bit more diligently. But at the end of the day, we are getting enough action, enough price action to be able to make some cash here. If we just take a look at what Apple's doing, this stock was actually an absolute rock star for just so long here. We did come down, test this channel level and test a 20 SMA here, and we got this nice push up. I love this hammer candle here on Apple, 173.47. Again, you don't want to just get long right off rip. We are going to have a little bit of resistance here at 174.50. Okay, so I can see us coming up one point, getting rejected, and I can see us start to roll back over. The minute people start going long here, they're going to be asking themselves, what happened to Apple? How come I got long here? Everything looked great, and then now we're red on the day. Guys, we only have 1 point worth of room, meaning we have from 172.50 to around 173.50 before we can get faded. So if this move happens in the first 30 minutes to an hour of the morning session, and then we get rejected and we can't confirm that at the 7 o'clock hour candle or the 8 a.m. candle, and we start to roll back over, then hey, if you're a day trader, you're a scalper, then you're going to take that level, you're going to short this, you're going to use this as your absolute risk, absolute max pain. You're going to put your stop loss anything over this, and then you're going to short it back to the downside. That's just how you have to play these ranges, guys. I hope that helps. If you want more information, you want to be involved in my Discord, I throw out some levels intraday. Today I had some killer bangers. Microsoft was one of them. SPY was one of them. There was levels on Tesla in there. There was levels on Amazon. So there's a little bit for everybody in there. Join that Discord, completely free to join. I do have a paid section as well, where I kind of do my personal watch list of stocks that I'm watching each and every day to trade, kind of get those alerts before I put them in the main room. Also, give me a thumbs up, subscribe to the channel, drop me a comment, and I will see you guys all in the next video.